Hey there, my investing curious friends. Welcome to Opening Bid. I'm Brian Saza, Yahoo Finance's executive editor. Basically, that's just a fancy title for I'm crazy about what I do and wake up every day pumped to help you become a better investor. So jump into the stream and let's enjoy this journey together. I have a very, very special leader with me today who has truly seen and done it all in corporate America, John Chambers, the former CEO of OG tech company Cisco from 1995 to 2015. Today, John is the founder and CEO of JC2 Ventures, a VC firm on the pulse of everything hot in tech. John, good to see you. It's been a while.
It's been too long, Brian,
Yep.
but it's neat being on one of your first sessions this way. I love your enthusiasm. That hasn't changed.
Before we get going,
Sure.
I was thinking back. You have been with me every step of the way the past decade of my career. I just wanted to thank you. You know, it's been a joy following you. And I went back and I looked at the first time we talked. It was April 2016. I was just nervous to talk to you, John. Full stop. I just have to get off the table. I just have to let you guys know that.
Well, we're all equal in life, but Brian, one of the many reasons I like interfacing to you is you make me think.
Oh, I appreciate
You
it.
get me outside my comfort zone, you challenge me a little bit, and together, for your listeners, hopefully we'll leave them with 1 or 2 points they can say, that really changed how I invested in the future.
Well, that is what we're looking for here.
Okay.
And you know, one of the benefits of this format is you can really dig deep into career paths and lives of top leaders such as yourself. I never asked you this, but how do you become a CEO of a company like Cisco? Not only become the CEO, but hold onto the spot for 20 years. I mean, in the time that we have, break that down for us.
Well, I think there's differences for everybody's background, so there isn't just one playbook, and as you know, I'm a believer in playbooks, but I would think it starts with an education. Getting a good education. In today's world, I think you've got to understand technology because every company is going to become a technology, digital, AI company. I think it also is you've got to have the drive to do it. And you've got to be not risk adverse because this is a high risk job. And when you take risks, you're going to miss sometimes, and you're going to learn more from your mistakes than you do your successes. If you look at the common ingredients, it is all about focusing on results. The best way to get results is a great team. Best way to get results with a great team is focus on your customer, listen to constructive feedback, constantly raise the bar, if you will, much like you're working out a lot. I do the same thing.
I am. I'm looking and feeling good.
I
So
try
are
to
you.
get my time spent every
So are
day
you.
when I run the 3 miles through the woods, etc. And it is then also your currency. If you were to say, what is a leader's currency? It's 3 categories. It's your track record. And people watch, what have you done? You were kind enough to say over the last almost 10 years, what have you done together? Then it's relationships. Do you build trust both with your team, with customers and others on it? And the last element is that trust component part. So our success as investors, or our success of creating wealth for those investors, is about those 3 currency elements.
The cool thing with this, with the platform like Yahoo Finance, John, is then, and especially now, and
Yes.
it's a special moment for Yahoo Finance, but is we're attracting like the next generation of leaders and investors. But let's go back to your childhood. Do your parents, did they say, I want to create a CEO? I mean, what does that playbook even look like?
Well, I was very fortunate. I came out of a very nurturing, loving family. I had 2 doctors as parents, and when anything broke, they could fix it. Mom was psychiatry and internal medicine. Dad was OBGYN, delivered 6,000 babies, a 4th of them for free for people that couldn't afford it in terms of the direction. They helped me an awful lot in confidence. They instilled early on that education was the future of what I could do in life. They never put pressure on me. I usually put my own pressure on. I had an issue of dyslexia before dyslexia was understood, and I didn't used to talk about that, Brian, because even now my hands sweat when I talk about it. But that's a learning disability, and because of their patience with me and a spatial teacher by the name of Mrs. Anderson, I learned how to take a weakness and overcome it, and then I learned how to make it a strength. And it would surprise you, probably 1/3 of the leaders in the world are dyslexic, but anybody who has been dyslexic would tell you they have at times doubt. Can they do something? Do they can make it happen? And then I think you get the courage to go for it. And I love to compete almost to a fault. I remember the times I missed more than I do the successes on it overall. So how you handle your setbacks are probably as important or more than how you handle your successes to become a leader.
From 1995 to 1999, you're the CEO of Cisco.
Yes.
What was that time like? Because essentially that is the ramp really into the birth of the internet.
Oh, it was the best postgraduate course imaginable. And John Mortgage, who hired me, was kind enough to say, "You're my successor." So when I came on January of 1991, he gave me one thing after the
You
other.
still
By
remember the
95.
date? You still remember that?
Oh, very much,
Yeah.
very much. It was a big jump for me. An East Coast kid coming to Silicon Valley that I didn't understand. We thought these people out here were a little bit unusual with how fast they were moving on technology, and I realized they were the innovation future. But when I came out there, he immediately gave me sales, and then by the time 95 rolled around, I was already running the company in almost all areas. What was it like? 40 quarters in a row of hitting and exceeding expectations every
BCO was
quarter.
easy.
Oh no, 80% of the business was new every quarter. It isn't like today's ARR where you've got 80% of your business in the bag, sorry to say it that bluntly, and you only need to get the 20% more for the quarter in terms of the direction. It was fun because when I said we're going to change the way the world works, lives, plays, and learns, people look, you're a router company. You move around zeros and ones for techies. Not going to happen. But I grasped and I put in business and economic and social terms what our product would do for them. And then we shared the success. We had the highest customer satisfaction in the industry for 20 years. We were the very best at acquisitions, 180 acquisitions, and those are high risk but high return type of opportunities. Our best places to work still very much continues there today in terms of the approach. We created 10,000 millionaires when a million could buy your house in Silicon Valley among our employees.
Not anymore. I might buy you a box somewhere. I don't know
small
where.
one,
Yeah.
a small one. But we were also trusted around the world by both our allies and even at times by our adversaries.
So you're a couple years in. You're building this giant company through aggressive acquisitions. You're still somewhat of a new leader in that CEO role,
Yes.
and then, boom, internet crash. What were those days like for you as a leader?
The internet crash, you mean your
Yeah.
2001?
Yeah.
It was the hardest things I've ever done in my business life. We'd won every award there was to win, top CEO by Harvard, by American CEOs, the ranking, most valuable company in the world. We could do nothing wrong, and we had spots that we needed to do better. We were pretty humble, even though we were very tough to beat. And we had a mentality, which I think is important for your investors to do. And in high tech, if you don't have an attitude of 1 or 2, you're probably not going to survive, much less be in the top 3 or 4. So it was a rush. When we got knocked down, I kept doing the right thing too long. And that's an important lesson for your listeners to hear. In today's model, if you aren't constantly reinventing at a faster pace, and with AI, it's 3 to 5 times the pace of what it was with the internet and the cloud, then you're going to get left behind. So I'd gone 40 quarters in a row, never missed any expectation. My numbers were so good, even though we didn't have AI back then. I knew what my next quarter was going to be based upon my last week of the prior quarter, based upon how every day applied to the prior years, based upon how many sales reps we have, and we were plus or minus 1 or 2% on the year on our accuracy. All of a sudden, my numbers were saying we were going to grow 70% the next quarter. The market was coming down, so we had level set the market probably 35% growth. I thought it was a number that was very, very conservative. And by mid-January, minus 45%. Mathematically impossible.
Massive slowdown.
We'd never been below 50% growth. We're minus 45. 25% of my customers completely disappeared. $1 billion-a-year customers. The market all of a sudden said it's Cisco's execution issue, and I was concerned.
What do you do in that moment with that swing? How do you deploy people, and what's your playbook?
Well, the first part of the playbook is you go get the data. You have the data up to a point in time. Clearly something happened you didn't anticipate. I went around the world for 2 weeks and talked to customers, talked to key industry leaders. The numbers hadn't been shared yet, but I saw my numbers were not coming in terms of my orders, so I knew I was in trouble on the quarter versus what I thought we were going to do. I came back and made the decision that night to reorganize the company, to make a reduction in headcount. And remember, this is my family. I knew every illness of every employee and it's 50,000 people in the company at that time, of themselves, their spouses, their kids. We were there for them, and I made a decision to lay off what ended up being 7,584 people. It was hard, but once you get your data, inaction is what gets you into real trouble. We announced the next day at close of business that we were reorganized. I'm sorry, at opening of business, we were reorganizing the company, that we were going to take expenses out, that we'd do these changes in a period of 50 days, I think it was, and our goal was on day 51 to have them all done and move forward. What was it like as a leader? Heartbreaking. I never dreamed I'd have to lay off people. And I did that at IBM and Wang, and at Cisco I was very careful and running it very conservative. These were my family, literally, in many ways. And I questioned for a while, was I the right leader to lead us out of this? And how did I not see this coming? As it turned out, because of my experience, I then took a step back, outlined a game plan, and we executed through it extremely well. And we were already back gaining market share at a time most of our competitors 1 quarter later were just realizing how severe this dot-com boom was going to be. We came through it better than anybody else, but that doesn't make you feel any better. But we did learn from it. So what was it like? I wish I could have done anything to avoid it. You learn more from your setbacks in life, and if you're not taking risks, you're never going to lead. But when the Great Recession came in 2008, I saw the numbers in 2007 in the summer. All of a sudden, my top banks stopped ordering very much. And I said, there's something wrong here. I asked the CEOs of the banks, is there something going on unusual? They said, no, John, we're being conservative. 8 out of 8 isn't conservative. Yeah. So I announced to the market, I felt there was a problem coming, and we were going to adjust our company appropriately. The market killed me that day. But guess what? 2 quarters later, when the slowdown hit, we actually were prepared for it. We didn't have to make the changes others did. We actually loaned the automotive companies money, even though they might have gone bankrupt because they'd always been there for me. We came out in the leadership role stronger than ever. So just don't make the same mistake twice as a leader is the key takeaway. And if you're not taking risks, you're not going to get ahead in life. If you take risks, they're going to be failures. And it's more how you put the pedal down on your successes. And when you do fail, which all of us will do, and if you're not taking enough risk, how do you deal with that and learn from it?
Hold there for a second, John. If you're watching this online, hang tight. We're going to take a short break. But if you're watching this and listening to it on our streaming platforms, we're just going to keep on going. All right, welcome back to Opening Bid. John, really awesome insight there on what it was like to lead during that internet crash. But let's fast forward to today.
Yes.
Are there parallels that you see from that period to what I think investors are seeing with various AI stocks and various AI companies? In many respects, these are, I'll leave out NVIDIA and AMD for a second. These are very credible companies, big revenue, big profits, but there's a whole host of private companies really getting hyped up. They're working on cool AI stuff, but they don't have any revenue in some cases, and they're making losses. I mean, are there parallels that you can compare to?
There are many parallels that are almost identical. Too much money going into market, getting funding in a number of companies. There's clearly going to be a bubble, and some are going to fall out. There's going to be some spectacular train wrecks, but there are going to be huge successes coming out of it. And that was exactly what happened before with the internet, where Cisco moved from a company that people didn't even know we were not a delivery company, delivering trucks and food, to the most well-known company in the world in many cases. So let's look at what is parallel. AI will be bigger than the cloud and the internet combined. This isn't something I said once Microsoft began to get interested in open AI. I said it 7.5 years ago. For your investors, I made my bet on AI 7.5 years ago. I've got 9 unicorns out of 22 investments. 15 of those have only been around for a reasonable time. 7 are pretty new. I have the top unicorn in terms of business-to-business application of AI and Unifor run rate of about $180 million ARR in terms of the direction. I have number one AI players in software security, etc. But the parallels are, you've got to move quickly, you've got to say what is your differentiation, you've got to gain market share, and the speed of the market, however, is about 3 to 5 times what it was in cloud and what it was in the internet. What is different? The productivity that comes from this will be mind-boggling, hence the value of the AI companies. It used to be that a company could start, and if I had a really good startup 7 years ago, they would develop their code first 2 to 3 years, they begin to go to market on it, they'd hit a $5 million run rate about 5 years in, they'd begin to scale up to get to be 100 million. As you know, the number of companies to get to be 1 million to go to 10 million are only 4%. Mm-hmm. The number of companies that hit 10 million in revenue to go to 100 million is only 7%. So your chances are, what is that, less than 1% you make that cut on it. But your ability to navigate through that is going to occur differently this time. So I will have a new company or an existing company goes into a new market that will develop their product in 3 months now. The AI developers that are born, in other words, this generation of AI developers can develop at 3 to 5 times the pace that they could do just 2 years ago. You can bring products to market quicker, and the market's going to expand within it. So in terms of your viewership will understand, let's assume there are 6 companies worth over $1 trillion today. Let's assume there are 5 between, let's say, 250 million and $1 trillion. And let's assume there are about 40 in the 20 million to 250 million. Mm-hmm. So 40 plus those 5 that are below $1 trillion is 45. I think there's a good chance, a very good chance, by 2030, just 6 years, that you will have between 110 and 140 companies in that category.
Wow.
A large number of these will be AI companies. So will a Google or a Microsoft or an Amazon make this transition? Yes, they will. Might be one of the first times that a prior generation leader is one of the leaders of the new, but will there be a whole bunch of these new AI companies you're referring to that really go from a small number of people to very large and very large success? The answer will be yes. Parallels. Back in the time period when Facebook bought WhatsApp, Mark paid, what was it? 16 billion, and many people said, what is he thinking? Turned out to be one of the most successful acquisitions ever. You go back to my internet era, I paid what was 92 million for 10 million in revenue. People said I was losing it. Ended up being $13 billion a year stream for me. Fast forward today, OpenAI, what have they got now? Less than 1,000 people on it, and their valuation was 80 billion.
Why doesn't Microsoft just buy them? Do you see consolidation happening?
Oh, I think the consolidation would definitely happen. But regulatory issues are going to be tough here because the regulators are going to say, if you have too large a market share or you use your current position too aggressively, we're not going to approve it. So I think it was a brilliant move by Satya. In fact, if you really want to give somebody maybe one of the best CEOs over the last decade, Satya has really developed into that and done a great job. So coming around to your question, are there going to be a number of open AIs, and will they be 10 years between a WhatsApp and an open AI? There are going to be a number every year. Go back to the number I said, that number of well over 100 that come into this market between 20 billion evaluation and 250 billion. So that's the opportunity in front of us. But will there be a number of failures? Your investors need to know that.
How can investors avoid an AI train wreck? I mean, I imagine you're constantly getting pitches because you're John Chambers, you know what to look for, but a lot of folks that might be listening or watching this, they see AI company, let's put my life savings into it.
Well, first, don't. First advice. Secondly, the one thing I've learned the hard way over time is if I knew which acquisitions would work out the best, I would have even better hit rate, and most people would say we were the best there was at Cisco on those. 2/3 of my acquisitions exceeded what we told the market would do. I thought more than a third would fail. Our hit rate was even better than that. And we'd do an acquisition of a company literally in a weekend for $3 billion that I didn't even know, and it worked well. But what I'd like for your audience to think is much like I do. I have a portfolio of companies, and all of them will become AI companies, not just the 6 who were originally. I've pushed them all into AI in a big way. And I spread my bets across them, and you average on those. The companies that I thought might have been the highest probabilities of winning 5 years ago, some of them didn't even survive. The companies that I thought were just going to be okay end up being stars. So as an investor, you've got to balance your investment. Do I think betting on AI over the next decade is the place to be? And it's going to be an AI decade. It will be so much bigger than anything we've ever seen in every aspect. then that would be the way to go after. If you only invest in one company, I would never invest in one company, even as experienced as I am in it. I do it in 20, and it's that balancing that becomes key. Now, what should you watch for? You want to watch what are the distinct sustainable advantages the company has. Do they have a base of data that they're gathering? Are they able to add those superstars in it that are able to make a difference, like occurred with WhatsApp, like what occurred with OpenAI, with what's occurring in some of my startups, watching a company like Unifor or Safe Technology or Pindrop on it. And then look at what are they doing, that how fast is their growth rate, have they got good cash flow. So the days of free money are over. So even though some of these companies are getting unbelievable valuation very quickly and will probably go IPO too early, watch what is their path to cash flow and key profitability. So evaluate it using my terms: 2/3 in growth, 1/3 focus on cash flow and profitability and direction on it, and then listen to the customers. Steve Jobs took him 7 years to build his products. I kind of shortcut that. I go straight to customers and say, what do you think of this startup? And so if I were an investor, I'd look to see what are the startups, how are they viewed by the companies they sell to and direction-wise. The key takeaway, bet on this industry segment. Bet on India, by the way. They're going to lead in AI, following the U.S., in my opinion, long term. But spread your bets.
In the minute that we have left, John, now
Sure.
it's my goal to leave listeners of this and watchers of this vodcast a point of inspiration.
Okay.
So they've been listening to you for the past 23 minutes.
Okay.
How could they become a successful leader? Maybe they're not on a CEO trajectory. Maybe a best leader might be a team leader at a random office. How can they achieve that?
Your question is the right one. I have about 280,000 followers on LinkedIn as an example, and it's all about leadership and sharing the stories. Here's what my recipe for success would be. Remember my comments. Your currency is your track record, the relationships you build, and people trust. So you want to develop a track record that you're very proud of. You want to build relationships, even with people you may not get along with. And you want people to trust you, regardless, even if they're competitors. My competitors always trusted me. Then I would think about it. To become a good leader, it's very basic. Outline a strategy and vision, build a great team to implement it, be customer focused in everything you do, and dream bigger. I think the major worry I have in the U.S. is we're not dreaming big enough. Having just come out of 11 days in India, that country's on fire. It's going to be the fastest growing country in the world in GDP, highest standard of living. It will be the largest GDP in the world, etc. U.S. and India working together, dreaming to make it and change the world. So as a leader, dream bigger, get your education, but two things you ought to know. You've got to understand technology and AI. You don't have to be able to code, because in this world you actually don't have to code. And then you've got to understand how to catch market transitions right.
Wow, we will leave it there. It feels like I just went to school. John Chambers, you have been with me every step of the way the past decade of my career, and have given me a lot of great advice off camera, and I appreciate you always making time for me.
Brian, I learned more from you than I give back today.
Oh, stop, come on.
I hope your audience enjoyed it. You invite me again, I will come back anytime you want.
I will. Well, I seem to only invite you when I'm launching new things. Nonetheless, John Chambers, it's a pleasure to see you. Thank you for joining us.
Brian, it's a pleasure.
Thank you. Business and investing might be complicated, but on Yahoo Finance's Opening Bid, we serve you up the fiercest market commentary, hot perspectives on stocks and top leaders, and those juicy inside scoops. I'm Brian Sazza, your host and Yahoo Finance's executive editor. Join me each week as I tap into my extensive C-suite Rolodex to bring you provocative and thought-inducing chats with today's most influential leaders and market movers. Tune in to maximize your success on all things investing and finance with Opening Bid each week on Monday and Friday at 8 a.m. Eastern Standard Time. Leave a better investor and a leader every single time.